This separate analysis focuses on the broader market cycles and the weekly technical structure, rather than short-term daily movements. The perspective here shifts to the long-term behavior of Bitcoin relative to the 4-year halving cycle and the role of Tether as a liquidity provider in the global economy. Bitcoin is currently navigating a complex phase of price discovery on the weekly time frame. The market structure suggests we are in a period of high time frame consolidation, which often precedes a significant volatility expansion. Unlike the daily chart, the weekly chart shows that the primary trend remains bullish as long as price holds above the key swing low of $74,000. This specific level is crucial because it aligns with the point of control from the previous accumulation zone. If Bitcoin manages to maintain this floor, it preserves the integrity of the macro uptrend established earlier in the cycle. A detailed look at the Bollinger Bands on the weekly chart reveals a significant compression. This tightening of the bands indicates that volatility has reached historic lows and a major price expansion is imminent. Historically, when Bitcoin experiences such low volatility, it is followed by a violent breakout. The direction of this breakout will likely be determined by the interaction between spot buying volume and the derivatives market. Currently, the funding rates in the perpetual futures market are neutral, which suggests that neither longs nor shorts are overextended. This neutrality is healthy for sustainable growth as it prevents the liquidation cascades that often crash the market. The mining sector provides another layer of fundamental insight. The hash rate of the Bitcoin network continues to hit new all-time highs despite the price stagnation. This divergence between price and network security indicates that miners are investing heavily in new hardware and infrastructure. They anticipate higher prices in the future and are willing to operate with thinner margins in the present. However, if the price drops significantly below the average production cost for miners, we could see a capitulation event where inefficient miners are forced to sell their holdings. This would create a temporary supply shock before the market stabilizes. The analysis of Tether shifts to its role as a bridge for global capital flow rather than just a trading pair. The supply of USDT has been relatively flat over the last quarter, which correlates with the sideways price action of Bitcoin. New money entering the ecosystem typically manifests as an increase in the circulating supply of stablecoins. The current pause in USDT minting suggests that institutional capital is waiting for regulatory clarity regarding stablecoin issuance in major jurisdictions. There is also a geopolitical dimension to the usage of Tether. In regions with high inflation or strict capital controls, the demand for USDT acts as a proxy for dollar demand. This offshore demand creates a steady buying pressure that is independent of Bitcoin price action. However, when this liquidity moves from preservation to speculation, it flows rapidly into Bitcoin. We are currently seeing high velocity of USDT on the Tron network, which usually indicates retail payments and transfers rather than large-scale institutional accumulation on the Ethereum network. The correlation between Bitcoin and the aggregate supply of all stablecoins, including USDT, is currently decoupling slightly. This anomaly suggests that internal rotation is happening within the crypto market. Traders are moving funds from altcoins back into Bitcoin and USDT rather than exiting the ecosystem entirely. This behavior is typical of a risk-off environment within the crypto space, where capital seeks safety in the most liquid assets. Looking ahead, the relationship between the USDT treasury yields and Bitcoin performance is becoming more relevant. As interest rates in the traditional economy fluctuate, the opportunity cost of holding and yielding assets like Bitcoin changes. Tether generates revenue from US Treasury bills, and this business model has made it a systemic player in traditional finance. If the yield on traditional safe assets falls, Bitcoin becomes more attractive as an alternative store of value. The conclusion of this analysis points to a dormant phase that is nearing its end. The compression in volatility and the steady growth of network fundamentals suggest that the market is coiling for a move. The key trigger will likely be a resumption of USDT printing or a shift in miner behavior. Investors should pay attention to the weekly close relative to the 20-week moving average. A sustained close above this dynamic level would confirm the continuation of the bull market, while a rejection would prolong the consolidation well into 2026. Bitcoin and Tether are currently in a delicate phase as the market approaches the end of 2025. The general sentiment in the cryptocurrency space has shifted towards caution due to macroeconomic factors and regulatory delays. This analysis covers the technical and fundamental outlook for both assets using the requested format. Bitcoin is trading around the $86,000 level after failing to sustain momentum above $90,000. The price action indicates a short-term bearish trend as sellers have taken control of the market structure. The rejection at the $90,000 resistance zone was significant because it coincided with a lack of buying volume and negative news regarding crypto legislation. The United States Senate recently decided to postpone key cryptocurrency bills until 2026, and this decision has caused uncertainty among institutional investors. Large holders or whales have been distributing their coins, which creates selling pressure on the order books. The technical chart for Bitcoin shows that the $85,000 level is a critical support zone. If the price breaks below this area, the next major support is located between $82,000 and $84,000. Losing this support could trigger a deeper correction towards $79,000. The moving averages on the daily time frame suggest downward momentum is building. The relative strength index is below the neutral 50 level, which confirms that bears are currently stronger than bulls. Traders are watching the $8,500 level as the first major resistance. Bitcoin needs to reclaim this level on high volume to invalidate the current bearish bias. Institutional interest has cooled off slightly in December 2025. Recent data shows significant outflows from Bitcoin exchange traded funds as traditional finance investors de-risk their portfolios before the year ends. The flow of capital is moving away from risk assets like Bitcoin and into safer instruments. On-chain metrics reveal that the number of active addressees has dropped to lows not seen since 2023. This decline in network activity is often a signal of consolidation or a lack of retail participation. Tether or USDT plays a vital role in this market environment as a safe haven asset. The analysis